Martha Timjiwa. I guess a few of you have seen me at the scheme before. And yeah, that's basically it. Perhaps I've served the scheme for the longest time, from around 2015, when Arcadia first joined the scheme. And I believe I have sufficient experience to take you through, because I know how MURBS as a scheme operates. I know the challenges as a scheme lawyer. I know the day-to-day challenges that the scheme faces. And I think it's on that basis that the scheme office or the secretariat found it or deemed it worth to bring Arcadia Advocates on board as the facilitators for this training. So there's a whole group behind this team. There's a whole group. Some of you have met Paul Kutesa. So there are a whole lot of other people who unfortunately are not able to join us today, but I hope we'll ably represent them. So if you could kindly allow me share my screen for the presentation. And stop sharing my video. So, as already discussed, it's Arcadia Advocates, and today we get to discuss the role of the member, as well as the obligations of the member as far as managing our obligations are concerned. When you're planning for retirement, rarely do we pay attention to what our roles as members are concerned. We know the trustees, we know the roles of the secretariat as the secretary of the board has mentioned. We know the roles of the sponsor who must make sure. So we tend to make a lot of noise about this and that, but we never sit down as members to understand what role we can play as we manage our benefits. So all the people I've mentioned above, the sponsor, the secretariat, the trustees, may be slightly or fully aware of what their roles in ensuring that Martha, as a member of Makerere University Retirement Benefit Scheme, or Cleopatra as a member, has a golden retirement. But as a member of this scheme, have you ever wondered what your role is in the entire process of managing and increasing your retirement benefits to the scheme? Do you recognize that what you take home at the end of the day has a bearing on what you do during your service during your service to the university, or how what you can do to protect and preserve, and in certain circumstances, perhaps increase the benefits that get to be available to you at the end of your retirement. So today's discussion is majorly going to focus on that question. What can you as a member do to increase your benefits, to make sure your benefits are preserved, to make sure, to augment your benefits basically, and know that when you go back home tomorrow and you can no longer get in touch with your friends, and you can no longer make merry with so many people you've been making merry with at the university, you're still able to live a golden retirement and not regret the service you rendered to Makerere University, and not regret being a member of Makerere University Retirement Benefit Scheme. So this presentation has been broken down into 4 major sub-themes, so to say, and we'll discuss your role in management of the scheme. Then we'll discuss your role in contribution management. We'll discuss your role in the access options, or what you can do, at what point can you access, and then we'll open it up to you for discussion. So starting with our role in management of the scheme as members, we are going to discuss the issues. What can you do to control scheme governance or to contribute to scheme governance? We'll discuss how can you utilize the available meetings that are available to you as a member to increase your retirement package, and what can you do in the record management of the system. So what we need to know as we discuss the question of management of the scheme and what you can do as a member to make this process smooth, both for the trustees as well as for the scheme generally, and yourself, which, because the person who benefits mostly at the end of the day is the member. So what can you do? One thing you need to know is, first of all, is that benefits are a factor. What you take home, your entitlements at 60 years or at retirement are a factor of so many things. You have to look at the contributions you make to the scheme. If you're coming from a different scheme to join the service of Makerere University, you may come with a package from that scheme. For example, recently we've had members pick money from NSSF to transfer it into Makerere University benefits. Then we shall look at the interest we've awarded you over the years, and if there's any capital depreciation or appreciation in the investments of the scheme, then we shall also consider that. All these factors eventually contribute. So the formula, as you soon get to see later on in this presentation, is basically your entitlements or your accrued benefits at retirement are equivalent to what you contribute to the scheme, to what your sponsor helps you contribute to the scheme, to the interest you've earned over the years, the appreciation, and then the transfers you keep making into the scheme. So what can you do? All the discussions in here are going to be responding to that question, to that formula. How do we make that formula better? By participating in the scheme governance of the scheme. What you need to know is the process starts now. You cannot start planning for what you'll take home when you have a month to retire. No, it starts from the moment you join the university to the moment you're 45 or 55 or whatever. You don't have to wait for the last minute to plan. And knowing that I'm speaking to academicians, we are aware that you already have this information at your fingertips. But do you ever wonder how you can control the scheme governance, how you can control the appointment of trustees? As we are all fully aware of the structure of the Board of Trustees of Makerere University Retirement Benefit Scheme, the power to appoint trustees, at least more than about 2/3 of that Board of Trustees, is in the hands of the members. It's in the hands of the associations, various associations to which most of you belong. We have NUWEI, we have MASA, MUWASA, and all these contribute to the Board of Trustees. You appoint representatives to the Board of Trustees. How do you take this process when you're appointing the Board of Trustees? Because your trust deed and scheme rules have granted you that role, that power. It's a very big role. How do you arrive at the kind of person that you're sending over to represent you as an association of the university at the scheme level? Because as you already know, that once you send these people over there, when you pick your contributions from the university, when the university collects your 5% and tops up for you the 10%, which it sends to the scheme, you have no control over that money until retirement or until you qualify under any of the other access options. So you have no control on how it's going to be invested. All that power is within the hands of the trustees. So it's like getting your life and putting it into the hands of someone else to help you manage, trusting someone with your wife or husband and hoping that they will do a good job taking care of your wife or husband. That's a very sensitive thing. So when you appoint a trustee to the Board of Trustees as a member of NUWEI, as a member of MASA, as a member of MUWASA, which kind of trustee are you appointing? It is a fiduciary relationship. That one person who is the trustee is going to have a lot of power over your life and you're almost powerless. But at point of appointment, you can control by who you appoint? What capabilities do they have as a trustee? Are you appointing the most popular of them all? Are you appointing whoever your neighbor has told you to appoint? Remember, when you're going back home for retirement, your neighbor is not going to escort you so they will not be there with you at retirement. It's entirely up to you. And who you appoint is going to impact, because we have issues of integrity, we have issues of capabilities. Do you appoint puppets? Trustees, when you appoint people to the board of trustees, are you trying to appoint someone you're able to control as an association, or you're appointing someone who will have your best interests as a member of the scheme at heart? Because in certain circumstances, actually, sometimes your best interests will be contrary to what you want at a particular point in time. And trustees are empowered or are trained to be able to put your best interests at the forefront of their service, even when those best interests are not what you want to hear. So I would like to implore you members to kindly take that process seriously. And then when you appoint these people, please let them do the role, because you have trusted them. You sat in a meeting, you sat in an election, and as an association agreed the best person for us as MUASA to appoint to the Board of Trustees of Makerere University Retirement Benefit Scheme is Dr. Kakuba. When you did that, you trusted him to deliver a role. The reason why the law does not allow a trustee to be under the influence of someone else is because the law trusts them to be trained and empowered to exercise their duties as trustees in a professional and prudent manner. So when you're appointing someone, assume that you're appointing someone to take over the management of your property, because your money is your property. Are you confident that this person will manage your property in a manner that is almost similar to how you manage your property as a member of the scheme? So the other thing is the annual general meeting. Many a times, whenever the scheme I've noticed, I've been able to sit in some of the meetings that prepare for the annual general meeting, and I've come to realize that members are only interested in coming, find out one thing, that is the interest rate. But there's so much more that is discussed at the annual general meeting. We are discussing your accounts, your annual accounts, and in those annual accounts, there are so many disclosures that are made. We are telling you where your funds are invested as a scheme. They are telling you how much money they've made. They're telling you there's so much more information that is discussed. And in certain circumstances, they may bring resolutions that require the attention of the members. So don't come to an annual general meeting just to know what you've earned for a particular year and then move out and go. And make it a point to regularly and give meaningful attendance to their meetings, not just the annual general meeting, but any other meeting that the scheme may organize, because this is the only chance. It is your golden opportunity to scrutinize how your trustees, whom you appointed 2-3 years ago, are actually performing in the scheme. There are annual reports. Pay attention to the disclosures. In the annual reports, there is so much more than just this activity was undertaken. You'll have the profit for the year. You'll have the expense. You'll be able to read through and know how much has been paid to the service providers, for example. And like I always say, the devil is in the detail. So don't come to look at what is being disclosed to you as a member or what they're highlighting for you. You receive the annual report in advance. Kindly review and pay attention to the detail and ask the hard questions. Sometimes this is your point. This is when you hold the trustees accountable. It's the only time, like I said, your entire life is in the hands of someone you've trusted to manage it on your behalf. but you have no redress. Your redress as a member is limited to the general meetings and to a few legal remedies available in the law, but there is not so much. It is a relationship where one person has more control over the other. So when you attend the annual general meeting, you're able to scrutinize the reports and question why certain things are being done a certain way. Don't send a neighbor. Like I've mentioned before, your neighbor is not going to be there in your retirement. You have a right. The law has required you to be given an annual report in advance ahead of that AGM. Read it and come to the meeting and make a meaningful contribution to the scheme. So we have cases of the records of the scheme as part of the management of the scheme. We are required to maintain records of the scheme, and these records are supposed to be accurate and regularly updated. But you find that a member will update or will give records of their information at time of joining the university, and they never update. You go through so many phases as members. You joined as a single person, you're now married. You joined when it was just you and your wife. So much has changed over the years, and this information may not come in handy now, but it will come in at a particular time, at a particular point in time. Simple things that you take for granted, such as your names, how you write your name. Just writing Chewalianga. We ask you for who your children are, and you come and write Chewalianga. How many Chewaliangas can we find in Uganda if we were to look for your children? So it's very important for you to pay attention and have accurate and regularly update all your information at the scheme, because the day you wake up and we have paid Chewalianga Martha instead of Chewalianga Maliza is the day you realize that how you write your name actually means a lot. So do not take anything for granted when the scheme calls upon you to come and update your information. I know sometimes it feels like the scheme is asking for quite too much, but this is intended to protect you because names can be similar. We can have Martha Timjiwa and Martha Timjiwa E. Those are two different people, and they can easily interchange. We have issues such as nomination forms. Do you ever wonder where when you wake up tomorrow, God forbid, as you plan, because not everyone will reach retirement. That is the sad reality. Death strikes when we least expect it. So the reason we ask you for all this information about your family is to enable us take decisions on your behalf in your absence. So when you give us information in a nomination form, do you ever sit back to wonder, in the event that I'm not around tomorrow, is this information that I've given these members or the board of trustees sufficient to help them make a decision as far as my benefits are concerned? Because we do not need your money to stay in the scheme. Even when you die tomorrow, we shall look for people you would have wished for us to give your benefits when you die. So when you get to the nomination forms, give us and disclose fully. We understand that those disclosures may bring family challenges, but we also recognize that these are confidential documents. The information we collect from you as members of the scheme is strictly confidential. So feel free to go back home and lie to your wife about how many children you have. But when you are nominating people who you want us to give your benefits at the end of the day, pay attention to the detail. You alone are the only one who knows how many children you actually have. Don't let us get stuck with your benefits at the end of the day when we can actually give it to your children. Some of those children are actually minors and are still school going. You may want them to keep in school, but the money is stuck at MURBS because you failed to make a disclosure, that was basic. And perhaps it's understandable that in some of those circumstances, you may think that someone may disclose the information. But when you're filling these forms, please, 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 fully, I cannot stress that enough. Disclose, make full disclosure, because this is your first point of reference when we are taking a decision in your absence. But also when we are making payments, we shall pay attention to that detail. Then you have issues of legalities in nomination, inconsistencies in names of beneficiaries. You change names. I know legally it's members take it haphazardly, but the day you walk over to maybe passport's office and you're required to verify your name, is when you realize the impact of you interchanging your names. In one, you're Cleopatra Kohire Chebambe. The next one, you're Cleopatra Kohire. Then the next one, you're Cleopatra Chebambe. Those are three different persons. So when you're making these disclosures to the scheme, go back to your national ID, because this is the first point of reference. In Uganda, when we are looking for who Martha Timjiwa is, the national ID is a golden ticket to confirming who Martha Timjiwa is. So go back to your national ID, be consistent as you're writing your names, be consistent as you're writing the details of the names, because you may, if you turn up tomorrow, like I've mentioned, after 45 years of working for Makerere University, and realize that actually 15 years ago, MURBS picked your benefits and paid them to a different person. It is a very deadly point. I know MURBS will be held liable, we shall be required to pay, but the losses you make to the scheme and what you deny other members of the scheme because of one careless mistake, the cost ends up being a lot higher than just one individual. Because if we have to be taken on legally over a mistake you made 20 years ago, you're denying another member their right. So you're denying another member, you're reducing, in essence, another member's benefits out of one careless mistake. So take the processes seriously. Whenever you're invited to pay, whenever you're invited to update your information, kindly turn up and do it diligently. Then we have the question of investment of scheme funds. Have you ever wondered where you come in at time of investment? It is very clear that the investment role, like I've mentioned, you have limited control as members of the scheme. The power to invest these funds once you make contributions to the scheme is entirely reserved for the trustees. But remember, as I've mentioned, your entitlements, what we call your accrued benefits, are your contribution plus interest or loss. Just so you're aware, we can wake up tomorrow morning and award the loss because we've not made any money, as well as the appreciation or depreciation in the capital investments of the scheme. So interest or loss is a direct factor of the investment decisions that are made. So even though we rely on a prudent investment policy, this is drafted and the parameters set in there. Of course, these must comply with the law. They are set by the trustees. The parameters of where and how, which must be aligned with the law, depend and entirely within the knowledge of the trustees. So when you look at the annual reports, taking you back to your role in the general meeting, when you look at the annual reports, when you look at the annual statements of accounts, the statement of, the terms are a bit technical, but those statements, the annual accounts that are provided to you in your annual report, at every AGM, without fail, an annual report is given to you members. scrutinize, like I've mentioned before, scrutinize where your investments, where your funds are being invested. That information is disclosed in there. This is your only redress. When you're at the meeting, you have no control over all the other processes. But if you're at the meeting, you're able to scrutinize where these funds are actually being invested. You're entitled to know as a right, and that disclosure is made in your annual report. Scrutinize them. Look out for speculative investment decisions. If tomorrow, like I've mentioned, we wake up and invest in land in Katanga, and Katanga, we are unable to take possession, or because for one reason or another, we lose the land in Katanga, maybe there are squatters and etc. If we lose the Katanga land, assuming it is worth 10 billion, if the scheme loses the Katanga land and the amount of income made by a scheme within a particular year is 10 billion, believe you me, the 10 billion is going to wipe out your income for that year. And if we don't have an income, it means we do not get an interest. I hate to break it to you, but for that particular year, you will be able to receive a loss on your account. So you do not want that to happen to you. So review, scrutinize, and ask the hard questions at these general meetings. Because when we make a loss, when your benefits, there is nothing as tough as you going back home and realizing that you actually contributed benefits worth 50 million, but you're going back home with only 25 million of all that. You've spent 45 years contributing to a scheme only to go back with less than what you're entitled to. That is capable of happening if the investments are not prudently made. So review and confirm that they are complying with the law as far as investments are concerned. So the other thing is in regard to contribution management. We all know that as a rule, you're entitled, as a rule, as a mandatory scheme, every year, that's every month, by the 15th day of every month, Makerere University, who is your sponsor, must make a 10%, and then they deduct a 5% from your gross salary and submit it to the scheme. That is the role of the sponsor. We are all aware of that. There are consequences for that. Do you know how you fit into this equation? The trustees also have an obligation. They are supposed to collect. As of law, one of their major functions as a board of trustees is to collect your contributions. And because as I've mentioned, I don't think I've mentioned this before, but Makerere University Retirement Benefits is a defined contribution scheme. In a defined contribution scheme, the employer or Makerere University will not give you free money. Those things that happened with NICDAP, that happened with StanChart and everything, and in-house, are not going to be repeated for as long as we have Makerere University Retirement Benefit Scheme. So as opposed to you receiving a pension, you are supposed to actively make contributions, and that contribution includes your 5% that is deducted from your salary and your 10% that your employer adds on the 5% and forwards to Makerere University. So, but we need to know that the people who forward these contributions are human beings. They are human beings. Certain mistakes are made. And as you now know, if there are no contributions, because this is a defined contribution scheme, if you don't have contributions, there is no interest and there is zero retirement benefits for you at retirement. Members, if you wake up tomorrow and you've served Makerere for 45 years, and it turns out that for the entire 45 years you served the university, no contribution was made to the scheme on your behalf, you're going back home with zero entitlements. And you will not hold the scheme liable because the scheme did not receive your benefits. Of course, there are limitations on that. So even though trustees are entrusted with a role to collect on your behalf, and there are penalties for late remittances, and when you look at the scheme, Makerere University right now is mandatory in nature. Unlike 3 years ago, where it was still voluntary in nature. Now, every employee of Makerere University must contribute to the scheme. Do you ever wonder what happens to your money in a project? Of course, projects have their own limitations without inciting, but the systems set up at the university are not in position to tell the scheme with accurate certainty who is belonging to which project. But you members know the kinds of projects you serve, and you know the kinds of entitlements you have in those projects. Similarly, the trustees' capabilities are limited to general scheme trends. When trustees, it's easier for trustees to notice that contributions for the month of April to June 2021 have actually not been remitted if the general population is actually affected. But when only one person is affected, it's not possible for the trustees or the scheme to be able to track. They can try and track, but it's difficult to search in thousands of transactions and be able to know that actually this particular transaction did not receive contributions for the month of May. We are able to do so, but like I've mentioned before, it is human beings who upload these. So they are subject to human error without fail, even though they use machines. If a mistake is made at HR level, it will follow you all the way to the scheme. So because of that, because the capabilities are generally limited to general trends, individual cases become difficult to track. As a member, if they pay all the 10,000 employees of Makerere University, and out of those 10,000, only Martha has not received her contributions in a particular month, it is extremely difficult. The trustees will try, but it's quite difficult to track and know which month of Martha's money has not been paid. Members, you're entitled to a member statement. Read the member statement, scrutinize it. For the month of May, actually, for this particular month, I worked for A, B, C, D. My money should actually be more than this. There are certain details that are only and only within your knowledge. These details cannot be within the knowledge of the trustees. There's been an abrupt contractual change in your employment. You've gotten a salary increment. When they're sending you a salary increment letter, a copy is not sent over to MURBS. It is not. You're given a copy and the sponsor retains a copy. So sometimes we shall notice general trends or general changes in the nature of contributions that are coming through. Now, when we notice those general changes, we may do some guesswork. We go back, of course, to the human resource office. But the human resource office, like I've mentioned, is managed by human beings. It is subject to human error. But you have your contract, you have your appointment letter, you have your letter of promotion, you have your letter for a particular project, you know all the projects you belong to, you know which project is going to give you how much. All this information is within your knowledge and not within the knowledge of the trustees. So when you receive a member statement, pay attention to the detail. The devil is in the detail. Read through the member statement, scrutinize, and highlight any changes or any errors or anything that you think is actually not reflected as per your expectations, and follow up with the scheme office. The scheme office is open 24/7. Do not wait for 60 years to be able to realize that actually, I've seen cases where members come back to complain and say, you actually cheated me on my benefits. But what role are you playing now when you're still energetic? You have to wait for when you're 60 to know that you received delays. Sometimes the problem will actually not be at MURBS. It will not be at the scheme office, but it's emanating from the Human Resource Office, and you have the ability, it is your money. It could be 50,000, it could be 10 shillings, it could be 100 million. You have the power to follow it up and make sure it is fully paid. So confirm all your contributions as you expect them to come through, and be vigilant. Follow up with the scheme office, follow up with the trustees, follow up with the sponsor. Then do you know that you can also make your benefits bigger? Like I said, you go back home alone. When you were signing your contract with Makerere University, we did not call the entire team. We didn't call all your friends that you chill with at the staff canteen or wherever. No, it was Martha in your individual capacity. You alone. You alone know your current lifestyle, and the lifestyle has an impact on the kind of life you will live at retirement. So you can opt to augment your benefits by contributing extra over and above the 15% that you're entitled. It is allowed within the law, because you pack your bags and go back to Mbale alone. We will not go with you. Look at the contractual negotiations. This is a general problem with as far as projects are concerned. We have investigation, they're called investigating officers, something like that. These people are responsible for negotiating your projects. They are not directly linked to Makerere University, but you're liable to contribute under projects. But the nature of projects in Makerere University is such that it is impossible to track them down and know which project is being run where. And then certain projects come with particular conditions. So you may not be in position the scheme may not be in position to negotiate how much comes through on your behalf from the project. But you have the power to do so at time of negotiating your employment contract. So when you're negotiating your contract, review, pay attention, how much are they paying you in terms of retirement benefits? Because all these help augment what you take back home at the end of the day. The bigger your contributions, the more interest you receive, and the bigger your entitlement or accrued benefits at point of retirement. So we have the other challenges in regards to access to benefits. The ideal situation is that everyone else would love to retire at 60, but certain circumstances arise. That's the ideal. So the ideal is the normal retirement age, as you are fully aware, is 60 years. And as you're still aware, this retirement process is governed by the trust deed and the rules. So at retirement, I'm sure most of us here know that you can access 100% of your benefits, and you can opt to leave some of the benefits, or you can. I know there's been previous discussions on this, so you're fully aware. But what you do with that money at that point, your legal right is to receive, and our obligation is to pay you in accordance with how you have asked. But how are you going to receive your retirement package is entirely up to you. Do you want to receive it as a lump sum? Do you want to receive it partially? Do you want to leave it with the scheme until you're totally incapable of proceeding, working? Do you want, you're still under contract at Makerere University and you still wish to maintain your benefits until such a point, maybe 70 years, when you are aware that I'm now no longer able to work and I need my money. For that entire time, your money will be growing, but the decision is wholly dependent on you as a person. It's up to you to take it. Now, we have cases in our previous legal regime as a scheme. MURBS was not, you would be entitled to also receive your benefits at resignation or dismissal. That is no longer possible because you are a mandatory scheme. You can only pick those benefits and transfer them to another retirement benefit scheme. So when you wake up tomorrow and resign, you will not qualify for normal retirement, but you have a right to pick your benefits and send them over to NSSF, for example. So, but this is the ideal situation. So certain times, circumstances happen that are beyond our control. For example, you get to a point and for one reason or another, your back is no longer able to withstand the working conditions. So you wish to retire 5 years earlier than you're scheduled to retire. You wish you've been diagnosed with a disease, you're no longer able to work. The employer, who is Makerere University, has retired you because they think, given your medical conditions, you're no longer able to work. There are exceptions to that access. So you don't necessarily have to wait until you're 60 years if the circumstances make it impossible for you to do so. Our deed and rules, as well as the benefits payment policies, allow you to retire early. But that retirement is initiated by the sponsor. So you can opt to move over to your office and retire, because we will not be able to pay you until we have a confirmation from your sponsor that you've actually retired. So you won't just come to us and allege that you've actually retired. No, it's legally not possible. You must provide the proof of retirement. So if you wish to continue retiring, we shall not give you to continue working as a lecturer. We shall not pay you your money until you attain 60 years, which is the normal retirement. But if you opt to retire early, we can give you 100% of your benefits. But remember that you must have been in pensionable service of the university for a period of 10 years. Then we have the question of, before I get back to mortgages, and I'll discuss medical grounds. God forbid tomorrow you wake up, you plan to work till you're 60 years, but you've been diagnosed with a terminal illness, or while you are working as an employee, you end up permanently disabling your 2 feet, that you're no longer able to, maybe if you're a custodian or you're a cleaner, you're no longer able basically to work. We have what we call retirement on medical grounds. Now, that option allows you to be paid as a normal retiree. That means you'll access 100% of your benefits. But like early access, one, the person responsible for retiring you is not the scheme, but the university. So you have to go back to the human resource office and they retire you. Then we get that information and we'll use it to pay your benefits. And in the process of doing so, you must also avail us a certificate from a medical practitioner indicating that you're actually unfit to continue in the service. If you're still able to continue in service, we shall not give you benefits, because the intention is you're still able to work and want to give you this money when you're unable to work. We have the other element of medical access. Similarly, you don't want to retire, you've not been retired, but the medical expenses have become too much for you that you're no longer able to pay them. We have the option for you to access a part of your benefits. Now, this does not require you to retire. Once the Uganda Medical Board writes and recommends that you're a worthy case for us to give you to assign or use part of your benefits to pay for your contributions, we shall assign you up to 50%. Members, if you're able to work, please do not access medical treatment. If you have other means of paying for this, because when we pick out your 50%, and assuming you've been sick at 30 years old, so you're unable to work at 30 years old, or you've been diagnosed with a terminal illness, at 30 years old, you still have a whole 30 years to work. So if you have an alternative for paying for those medical bills, please don't come to us. Only come when it's a worthy case. We shall give you the money as long as you have a Uganda Medical Board, but it's to your detriment if you're actually using it to merely access your benefits. Don't feign a sickness. We are not keeping your benefits for our personal use. It is your money. 30 years from today, when you go back to Chiruhura alone, Martha is not going to be there. Dr. Kakuba will not be in your village to take care of you, but he will certainly remind you that you took out 50% of your benefits when you were 30 years and still able-bodied. Then I'll go back to the question of assignment for mortgages and loans. When Dr. Kakuba was starting this discussion, he mentioned midterm. So many of us are agitating for midterm and so on and so forth. It hasn't yet been approved, but are you aware that you already have an option which allows you to meaningfully utilize your benefits to complete your residential house? So if the reason you as Claire or Goretti or Moses want to access midterm is so you can complete your residential house, but you're unable at this point in time to find a 50 million to complete your house, but you're aware that MURBS has about 150 million of your money, we are able to assign. So what that means is we shall not give you the money in cash, but we shall allow you under our laws to walk over to a bank or a microfinance and get a facility and use your benefits in MURBS as a security for that loan. Now, when you use those benefits as a security, you're not accessing them, but it gives you an opportunity to pay back the 50 million at your pace, obviously subject to the terms of the facility that you've picked from the bank or whatever institution you will have picked it from. So the advantage of this over MURBS is you still have a 10 years because they're sure, a bank is certain that MURBS is in position to pay in the event of default. But you will be in position to complete your house at your pace and without necessarily affecting your retirement benefits package at the end of the day. Because if you have 5 years, you're able to work and pay back that. But what the benefits do for you is merely help you act as security. Of course, there are so many general details that I cannot complete in this discussion about the conditions for you accessing this. You must have been a member for at least 10 years and you must be in employment. You can only access a maximum, you can only assign a maximum of 50%. And if you're looking to purchase a commercial building, no, we shall not give you that money. Because actually we are required to walk over to you. I speak as we, because right now I represent the trustees. The trustees are required to walk over to that alleged residential house that you're constructing. And from the moment they realize that you're actually not constructing or completing a residential house, they are going to halt the assignment. And when they do that, you will have to find alternative funding. We've said it, all members, but circumstances can also accrue or arise where you've made all these plans, you did everything you could, but 4 or 5 years before your retirement, death strikes. It happened to many of our members during COVID. Is MURBS going to, in quotes, eat your money? No, we will not eat your money. I'll take you back to the question of nomination form. We shall rely on the information you've given us under that nomination form and help you to the best extent possible and to the extent of our abilities, help you distribute that money as you would have wished us to help you distribute that money. So as you fill that nomination form, it's important for you to align it with who you want to manage your affairs when you're dead. You know which of your children is more cantankerous than the other. You know which of your friends has your back. You know which of your many wives is actually more reasonable. You know, you have all this information within your knowledge. Please, please, please update the information regularly as possible, and tell us how you may wish for us to deal with those benefits at time of retirement. Unless there are other questions, I would go back to our major reason for us sitting here. Members, what you take home is a factor of what you've contributed, what you've transferred into the scheme, the interest that we annually award, and the capital depreciation or appreciation in the scheme. Play your role in this process. Don't wait for the board of trustees because you appointed them. Do your role. Appoint the right trustees, attend the meetings, manage your role in contribution, update your records, and look out for the healthy options in managing your benefits. We give you what you saved with us. We won't give you what Martha saved with us. We give you what you're entitled to. Do everything within your power to increase what you take home at the end of the day. Thank you.